The idea behind this panel, which we've called Investors and Investees, Capital and Advanced TV, is a loose thread of conversation around the innovation that's happening, either desired or not desired by the entrenched incumbents. So I'm going to have all of our folks just briefly introduce themselves so you have an idea as to where in the ecosystem they are. And then we're going to do a 50-point bonus or a 50-point toss-up questions. And you guys will be encouraged to have your questions, especially as things get a bit more heated or you see something that does not jibe with your worldview. So please, go ahead, Jeff. Please start.
My name's actually Evan Silverman.
Oh, as Jeff. So,
playing the role of Jeff today.
Jeff, there you go. Sorry.
I am
Go
actually
ahead,
filling
Evan,
in for Dan Surratt, who is my boss at A&E Networks Digital Media. And the reason I'm up here is A&E Networks, we might be seen as one of those entrenched old media companies, but we actually are partnering with Ashwin and Flingo, and we'll be rolling out apps and functionality on smart TVs later this summer across our 4 brands: History, Lifetime, A&E, and Biography.
What you don't know about Evan is that his middle name is Jeff, so that's why I got confused. Just kidding.
Hi, my name is Anne-Marie Roussel, and I'm the head of partnerships and acquisitions for Sharp Electronics, which mostly makes TVs, makes a lot of other things, but here we're to talk about TV. So what I do is I look at the various startups that are out there that are interesting for Sharp. Sharp really needs to go beyond selling beautiful TVs. I call it selling beautiful blondes. You know, the nice display screens that are really dumb blondes, and add some value and some services on top of that. So that's my role, to kill the dumb blonde. And so here I am looking at opportunities to find interesting startups, technologies that they are building and that really, frankly, could speed our go-to-market, because a lot of the innovation that's out there is already existing, and we have some companies here on this panel today that are doing interesting things. Why reinvent the wheel when somebody else is already pretty advanced in that? So that's my role.
Beautiful.
I'm Jeff.
And your middle name is?
Evan.
Yeah, you go.
There you go.
See how it works?
There you go. Right on.
Thank you, Jeff.
Yep, thank you. I'm the head of mergers and acquisitions for Kit Digital. I think several people here would know Kit Digital. It's a company that's been designed specifically to roll up the IP video asset management system space and delivery capabilities, primarily targeted towards telcos and operators as a B2B software platform and services company. I have, prior to that, which I think is also maybe interesting, I don't know how relevant we'll see it, but an early pioneer in the connected television space with a company called Rally Point, and I've seen many of you here in the room, you know that company. I also have a venture background, so maybe able to have some comments on that relevant to this panel. So I've kind of seen multiple sides of the questions that'll be asked here on the panel, so hopefully I can add some value on that.
Fantastic. Mr. Dean.
Hi,
I know
I'm
your
Dean.
first name.
What's that?
I know
you
your
do know
first
my
name,
first
yeah.
name, yes. I'm Dean Denhart. I run Black Arrow. Black Arrow, if you don't know who we are, we run and provide advanced advertising technology for the pay TV or service provider industry for both what we call the converged video world, which is a combination of both the QAM, traditional old school, as well as the IP and the hybrid components as everybody continues to shift from the traditional models to the IP delivery models. Black Arrow provides the infrastructure for all the advanced advertising to be able to support the new models as we evolve into that new IP world.
Peter.
I'm Peter Lowe. I'm the president and CEO of InSequence. And InSequence is a company that has a platform that allows programmers, advertisers, and distributors to enhance their advertising and programming content to make it more robust, more compelling, more engaging. And we allow them to do that at scale in a dependable and affordable way across every platform, from traditional set-top box to over-the-top, including mobile and smart TVs.
And last but not least, Ashwin.
Good afternoon. Ashwin Naveen, CEO, founder of a company called Flingo, mentioned, thank you, Evan, by some of my predecessors. We execute strategies for media companies on smart TVs. We license some technology on smart TVs to make them a whole lot less threatening to the traditional affiliate distribution model. For example, interactive TV, as we've understood it over the last 12 years, has been one that's very operator-centric. As we've seen in the last couple years, connected devices, whether they're smartphones or tablets or even the smart TV itself, will be connected and will have interactive features. But there's nothing that informs those devices about what show you're actually watching. So my company develops technology embedded in those devices that will quickly identify what show is on the screen. With that, we hope to make the over-the-top connected device market a whole lot more accessible to media companies like A&E and many others that we work with.
All right, so this works out really well because basically the first people that you see on the right-hand side of the stage are more from the corporate development and or investment-ish kind of world. And on the other side, you have three companies that are in some way, shape, or form trying to make that innovation happen, generally from the outside. Okay, I'll use that as a leading comment. You can debate it, but let's throw this one out as the first toss-up. A couple of people in some previous panels have kind of sort of made allusions to, you know, where is the evolution, quote unquote, of television, video, consumer consumption of video? Where is it? Where is the real innovation and change and model or models? Where are they going to come from? Is it going to come from the incumbents who kind of absorb it and evolve it, or is it going to come from the outside in a more furious ball of fire, or is it somewhere in between? Loaded question. I see Peter's eyes lining up first, so go ahead, because you've been on both sides of the aisle.
Did you say Peter's eyes were lighting up?
Yes.
I was trying to make them really dull.
Oh, good.
Well, that's a good question.
That's why I asked it.
Yeah, well, you did a good job. I actually think it's going to come from both places, right? I mean, the traditional ecosystem is incredibly solid and well-established and entrenched. And the people inside it are very smart, and they will adapt. And you know, my guess is that a lot of the adoption will be people from the traditional space embracing technologies like we're all trying to create. So, you know, I mean, that's certainly a big piece of our market, our anticipated market. You know, we do sell to traditional programmers and traditional distributors and traditional advertisers, and we think that, you know, more than anything, they feel compelled to play in all these new spaces, because if they don't play in these new spaces, their audiences are going to get more and more fragmented. So they need the technologies that we're all developing. I think on the periphery, you know, we're also all going to be doing things for non-traditional businesses, but it will start very much at the periphery.
So let me be more pointed on that. Would this current company controlled world on the operator side, the network side, would they do this innovation? Would they be forcing the issue on things like second screen TV and ACR and measurement and all those kinds of things on the inside?
I don't think so. I think that on the inside they're very comfortable. They have nice paychecks at the end of the month, and they are close to retirement age. So who wants to throw that out the window? There is basically an evolution that's a revolution in TV industry that's going to put a lot of these people in jeopardy. So the revolution's not going to come from the inside. And I've been on both sides of the fence. I've been an entrepreneur and a corporate. And I would say, generally speaking, innovation happens outside the corporates. It's the innovator's dilemma that we've all heard about. You know, once you get bigger and bigger and bigger, and I was at Microsoft before and I saw it, you know, it's not in your best interest to change. Your best interest is the status quo, okay? So innovation comes from the outside. Yet, there is this one company that we can all look to that is the exact opposite of that. If you turn around, you see the screens back there. It's Apple. Big corporate. Innovation, all the innovation in this space, mobile, communication, music, whatever you want, in the past 10 years, came from one corporate. So as soon as you make a rule, innovation comes from the outside, somebody will prove you wrong. And Apple just proved us wrong. So I don't think there is a rule. I would say based on my experience, I've seen that innovation usually comes from very small, and it's logical. How does the world grow? How does the species recreate themselves? Through the kids, through the little ones that grow. The parents learn from the kids learn from the parents. And you'll never see a parent who's going to be willing to go back to age 3
Dean,
and
go
let their
ahead.
kids run the TV.
Well, a couple things. One is I think you can confuse innovation and disruption. And so Apple is a huge innovator, but they're also an industry disruptor. And so the question was, is disruption going to come from the inside or the outside? And I think it depends on how you define it, frankly. But the reality is I don't think many industries, I can't think of one off the top of my head, I'm sure somebody could, where disruption came from within. Disruption always comes from outside. And of course it requires innovation. Conversely, the big entrenched companies can help foster the innovation to be able to allow disruption to occur. So I think the big entrenched guys out there, whether it's telecom, it's cable, it's satellite, and the entire pay TV industry, they do hold a very strong lock today, but the disruption's coming from outside. And technology disruption always comes, or whether it's business process or technology, disruption, I don't know, 99.9% of the time comes from the outside.
Can I just say, I don't think it is an either or. We are certainly interested in working with Flingo. It is in our interest. It's in our sponsors' interest. We announced in our upfront that we would be working with them, and there's been great demand. So it's really more about a transformation versus, I think, sort of a revolution. That's something I know Ashwin has talked about before. We, as a old school entrenched media company, I think are in a great position as content owners to deliver incredible experiences and in a way that a lot of other providers can't. So yes, we need to work with, I think, startups and other companies that are innovating and will help us sort of beyond the innovator's dilemma. But I wouldn't say it's an either or equation.
I was just going to make a quick comment. I believe that ultimately it's the consumers that are going to determine, how this whole space evolves. Just kind of bring it back into kind of the interactive space that we're all operating in here. The consumers are going to define what they want to do, and the devices and the behaviors and the social networks that they've adopted, over the last several years, I think are going to be a big player, and a lot of that has to do with, people just simply multitasking in the living room, and ultimately, whether it's a Facebook or a Facebook app that gets a lot of traction on the web and then ultimately moves to the television or into the living room, those are the types of experiences that are driving a lot of this disruption and transformation of the industry. And we're at a place that's really early in the transformation of the television and interactivity and what people will do in the living room. And there's a lot of trial and error, which is why I think you see a lot of companies being funded and new projects being kicked off to see how it works and see what really takes off. And a combination of companies that are operating on the internet with really cool ideas and bringing it back onto a new device or in a new context and a new type of usage. And that's what makes this whole space really exciting for all of us, is because we don't know what the ultimate answer really is until the consumers have played with it and we see what really takes off.
Yeah, so I certainly agree that clearly consumers are pushing on the outside, but I want to sort of take this to another level, right? So again, we've got sort of a counterweight here. You've got sort of the corporate side, if you will, and you've got sort of more the original innovation startup type firms. And I'm going to ask the first three folks on the left-hand side of our stage, right-hand side to the audience, the idea of getting that innovation and moving the company forward once you recognize that things are happening on the outside and it's important. I'll throw out a thesis: build, buy, partner. Okay, very simple framework, but big words that don't necessarily fit with certain corporate cultures. I wonder if each of you three can sort of give me a quick sense of where your heads are kind of at. Is it more on one area than the other? Is it a melange of all three, or what? And how long? And did it take you a long time to get to this kind of environment?
Yeah, I mean, I think you can overthink it a little bit. We are, A&E Networks is this incredible video content provider, and we provide other content as well now. and we see demand from advertisers and we see demand from consumers. And so we look out at the landscape and we look at startups and see who has relationships with OEMs and how can we partner with them, get in on the ground floor. I do think it's really just a great opportunity for us to experiment, to learn. Again, it's pretty straightforward. It's just finding the right technology and the right startups on sort of a case-by-case basis, and learning and developing with them.
But it's also a commitment of capital and resources, which isn't always tolerated. That's what I'm trying to sort of get at. So, Anne-Marie, you have any? Oh, sorry, go ahead.
Yeah, you definitely have to make that decision about scale, and are we not at scale yet? And so what kind of resources are we going to invest at this point? But I think that's why we try to be selective about it.
I think it's a good question because you need to have all three aspects in your strategy. There are certain people you're going to want to partner with, others you're going to want to acquire, and others that you're going to want to just take a small investment, a small stake in. And all are variable. It really depends. It's on case-by-case basis. I say the people that are pretty smart in this business don't go with just one idea. They look at companies and they keep their open mind. It could be that you want to acquire a company and the company doesn't want to be acquired. They want to build themselves, and many times I would, if I could, I would tell them, and even if it's my best interest to acquire them, I would go on the other side, tell them, don't do it now, because you should build your business and then sell it way down the line when it's worth a lot more. So it's not always, in the best interest of the company to be acquired right away. And sometimes, it's the other way. And partnerships, same thing. You have all sorts of partnerships. It could be an interesting technology partnership. You work with a big technology, like, for example, my company, Sharp. You might want to have access to the platform. In fact, again, Ashwin is here, and we're going to work with Flingo and give them access to the TV platform so that we can test some of their technology, ACR technologies on our platform. Well, that's a great step forward for both partners. They get to test on a TV platform, and we get to test a new technology. There are also commercial arrangements, partnership arrangements, where you might partner with a small company. A big company might partner with a small company to have access to their retail channels. We have a lot of access into Best Buy. Well, somebody might be interested in this. Or in manufacturing, we have access to lots of manufacturing facilities in Taiwan, in Japan, or whatever. So a small company that needs to manufacture something might be interested in that.
Well, so that sounds strategic and or validating,
Yeah.
but I would suggest that's not always the case in corporate settings where a ventures or corporate development group may or may not be aligned with the operating
Well,
units,
so okay,
right?
it depends what you mean by a venture corporate group. It depends if the
whatever the
corporate,
mechanism is. I'm
Yeah,
just
if the
throwing out
corporate
different
group is
words to use.
financial only, if they're only in it for financial returns, obviously they're not going to go into manufacturing, commercial partnerships and things. But if you're doing, as you say, strategic corporate venture, then you look at all the possible options.
Jeff.
We just buy companies.
Well, okay,
No.
so expand on that.
Yeah,
Why?
no,
Why?
Kid Digital is Kid Digital. The vision of our CEO. He's often called the founder, but he actually bought the first company and then bought. In total, we've bought 22 companies in the last three and a half years. But the whole idea was really taking advantage of a macro trend of video content of all forms moving to the internet and being consumed on primarily the web or the PC. And then over the last couple of years, expanding that message onto other devices. But basically, fundamentally, is IP video. So really looking at it as a macro trend. And at this point in the company's development, that mission is largely accomplished for what the board and management wants to do. So in a lot of sense, the M&A side of it, in terms of acquiring companies that are in that category, is done. And the places that we're looking at now are evaluating adjacent segments, video advertising. What's the state of the interactive side of the equation? Is that ready for this a similar sort of story? And is that something else that can be consolidated at this juncture, or is it something that we wait on? So there's a lot of strategy that goes behind now what's the next segment for us.
And integration?
integration I don't deal with. No, but no, that going into each of the companies, in a consolidation play at the aggressive pace that Kit has acquired companies, integration is almost a let's figure that out once we know, that we can get the deals, and let's integrate them very aggressively. Because if you look at the historical portfolio, there's a lot of companies that are very similar, and so you're acquiring companies for talent, particularly executive talent. You're acquiring them for customer revenues, and then you're basically kind of ripping up all of those business plans and forming a new one on the fly. And that's the way, the Kit way for the web-based over-the-top space. It's can often be confusing, and you see a lot of component parts that don't seem to make sense, from the outside. But it's because largely you're building an entirely new plan, based on a lot of component parts.
All right, so gentlemen on this side of the fence, is that what you aspire to, running a privately held company, looking to somehow have some kind of value event at some point, some way, shape, or form? Do you fear the integration thing with the big boys? Do you desire it? Is it somewhere in between? Ashwin, go ahead.
I think you always want to see some outcome for your company, for your investors, for your employees who've probably foregone, nice cushy jobs with high salaries in order to take the risk of starting a company. And there's depending on the economic cycle you're in, being acquired could be a very, very good outcome. And the IPO window is one that it's always not only difficult for economic reasons, but the regulatory environment affects that as well. So I think most entrepreneurs would be, for the right fit, very open to the idea of being acquired.
Yeah, and I just want to make a comment. In many of the companies that Kit acquired, they were money-losing businesses at the time that we acquired. In fact, you go back and look at the pro forma, for a lot of the companies that were very similar, we'll call it the OVP, or the online video asset management space. And I've done pro formas on companies, before I arrived on the scene, and collectively these companies are losing a lot of money. And for better or for worse, we've and some people would say the integration process is quite brutal when you're letting go a lot of people. But if you look at even in a 3 or 6 month period, what we did with a collection of companies, that were very similar in terms of technologies, had different customer bases, obviously different talent, and we put all the pieces together. Very quickly, they became very profitable companies because you're able to consolidate them in that way, which is a very valuable corporate, message.
All right, well, so Dean,
But
yeah.
I know where you're going with this question for guys like this that are thinking, what happens when we reach some goal, that's some sort of corporate transaction or event. So it can be brutal, yes. So I'm curious to hear the answers.
Let me add another little quick frame for you, for the two guys who have yet to speak on this topic. What is the validating promise of a bigger company? I mean, it seems to me like it's kind of a double-edged sword, right? Where the incumbents don't, for whatever reason, are not moving fast enough or see the opportunity as clearly as you might. Yet there's a desire to sort of be validated, if you will, in some way, shape, or form, whether it's partnering or more, into more of the ecosystem to sort of be proven right and validated and all that stuff. So how have you guys approached it? You guys have both been in sort of later stage, let's call them startups, have been there for a number of years and have seen a bunch of things come and go. How would you answer that?
Well, I think we actually approach this from a different place. A big piece of which I think is that we're very fortunate to have very patient investors. And our investors are about building; they're not about selling. We don't have VC investors, right? So it's a very different kind of mindset. And it's the core belief of our investors, of our board, of our management team, that the best way to create value ultimately for the investors and all the shareholders is to build a good business. And it's also our point of view that if you spend all of your time thinking about how you're going to get bought, you can lose your way really fast. I mean, it can be very distracting because you're you're really thinking about the wrong things as opposed to creating something that's it's a good business in the marketplace.
We all know this, there's many ways to be successful. I can only speak for how Black Arrow thinks about it, which is that we are a venture and strategic-backed company. I am not the founder. I've been running it for well over 5 years now. Having said that, the thought of some sort of exit never enters my mind every day, could care less. We spend all our time on product and building the right teams and the right culture and the markets. And the reality is when you start a company and you look out 5, 7 years, you don't have a clue as to where you're going to be. There's nobody in this room can sit there and say 7 years ago they knew exactly where everything was going to be today. So the reality is how dynamic and adaptable you are and where do you think the market's going to go. So I don't think we feel like we need to be validated by some sort of acquisition or public market kind of thing. And number two, there are many ways to grow. There's obviously the M&A like Kit does, and it works well for them. For us, that wouldn't work. We've spent a tremendous amount of time on building the right culture in our business, and we believe, by and large, organic growth is the right way to go. Now, having said that, that doesn't mean that we don't create partnerships and we don't figure out other acquisition alternatives, but our fundamental belief, based on the DNA we put in our company, it's about organic growth, and it's about moving forward and trying to think through where we think the market's going to be and be there before everybody else. And also when the market is moving in a way, be there with the best product. And that's how we run the company. But the idea of, thinking about an exit and be obsessed with that, I think is just fatal.
Yeah, just to add to what Dean said and to even add to your initial question, which is where does innovation come from? One of the advantages of being a small company, and I've been in both very big and very small companies, one of the advantages of being in a small company is you can sit in a room with 4 people and change the direction of the company in 4 hours. Now that's obviously extreme. You're not going to do that every day, but you can't do that. You can't even remotely do that at a big company. So just to elaborate on what Dean said, probably the most important thing on our minds is being adaptable, being flexible, staying close to the market, staying close to your customer base, and flexing to how that market is moving.
Excellent. So all I'm trying to do here is surface the sort of, it's almost tensions, right? I might even argue, too, that, if there were, and Ashwin actually is probably a little closer to this, venture capital as an asset class of investment isn't necessarily rational and strategically aligned, as you and Dean just talked about, right? At the end of the day, when you take investments from outsiders, right, venture being probably the more extreme of those, it becomes an investment, right? It becomes, yes, about building the company and making good things happen, but at the end of the day, it's also IRR, return, and maybe some things that pull you away from your strategic vision. How do you handle that? There's probably a corporate flavor to that, and there's probably a startup/venture sort of flavor to that. So I'm curious as to how you all sort of look at sort of that dynamic, because it's very real, and it does push people in different directions, or frankly, irrational directions, all the time.
I'll take that. That's a fun one. So,
I'm all about fun, really.
So we have 2 venture companies behind us, and again, I think everybody's experience is based on what they deal with. But if I was a founder of a young company, I would try to avoid at all costs any venture dollars. And if you're not, then you need to be able to make sure you can, and usually when you're a younger person and you don't have any experience, you don't really know what you don't know, so you end up taking whatever money you think you can get. But so what the goal is to shift the power, and shift the power back to the CEO or the founder, and then you're in a much more selective position to basically dictate how you want the deal to be done and how you want the financing and the expectations. But to the extent that the venture guys have the power, you're screwed. And the reality is they will shift you, and you don't have control. So the real question is, who really has the control in running the company? Do the venture guys, or does the CEO/founder? And that is something that if you don't have it, you better earn it, because otherwise you will get pulled. because frankly, these guys don't live your market. One of the key, I have this huge list, which I'm not going to share, but I have this huge list of key learnings in running this company, and I also have a list of dumb questions I've gotten from investors. I really do. It's on my phone. And
I would love to see that.
And that's a
screenshot.
bigger list. But the reality is that what I've learned over my years in running companies is that we know more about the company than the investor does. And so take their advice when it makes sense, but don't take their advice when it doesn't. And you've got to be able to have enough, it sounds bad, but I mean enough of the power in running the business to be able to say, no, we're not going to do that, but here's the 16 reasons why we're not going to do that. And I really do think that if you can, try to avoid it if at all possible. But the reality is in businesses like ours, you require a significant amount of capital to be successful. And you have to invest way in front, literally tens of millions of dollars before you see the return. And so as a result of that, you have no choice but to do that, but you have to be careful.
And how thick that string attached.
Yes.
Always very interesting. Go ahead, Ashwin.
No, I've had
That's good. That's exactly what I'm looking for.
I've had the fortune or the opportunity to start 3 different venture-backed companies. I've raised quite a bit of capital myself. Worked with probably half a dozen VCs here in Silicon Valley and elsewhere. I think sort of echoes some of the sentiments. Not all venture investors are created equal. It's a corrupting profession. It's one where good people can turn bad if in a bad situation. But what my experience has been is that there's some investors who are looking for a pump and dump and want to get in and look for a quick flip, and then there's some investors who or have that sort of holding period and have the track record to basically tell their investors. Because the interesting thing is that a VC is very rarely just one guy's money. It's a limited partnership with a number of other stakeholders. In my most recent round of funding, we were able to find a senior partner at a venture firm who had been proven. He was the first investor into Microsoft, has stayed on the board and for the last 30 years, has no problem sort of sticking with companies for the long haul. And having gone through this a couple times, my last company had a very different partner who was sort of looking for that very quick outcome and wanted to prove himself because he was young. And we have a very different tenor in our board meetings and very different outlook on the world. But this is to pick up the earlier question. This is the TV business, and small companies, good small companies, will get acquired because there are big stakeholders here. There's big revenues at stake, and to echo Anne Marie's point, big companies need to innovate, and sometimes acquisition becomes the path for that.
Speaking of Anne-Marie, I'm going to ask in the back can you put up that chart that we were talking about? So I'm going to shift gears here. So hopefully some of the dynamic that is involved around investment partnership and the dance between startups and corporate. So Anne-Marie was kind enough to volunteer this slide, and I'm just using it more as a mnemonic than anything else, but it's crazy complicated, right? So social television and ACR and the two-screen thing and the over-the-top thing and measurement and data and all this stuff is pushing against the still relatively solid, quote-unquote, television business. So if you believe in half of these things, either as companies or as features, right, the second screen, the social television stuff, the over-the-top delivery of stuff, what things, and each of you are going to have your own opinions, what things do you sort of see as most essential and tangible today that's going to happen relatively soon that changes the game? And what things do you kind of think maybe are a bit flyers right now or beyond unproven?
Well, since
Anne-Marie gets the first yes.
For the colorful thing here.
And again, we've all seen Terry Kawaja charts from Luma Partners and in all kinds of different areas. But in this space, no more, it's certainly as complex as those.
So basically here, and not all the companies, what's interesting is that not all the companies are there. I mean, it's just, you can't fit all the logos in there. So to your question, what do I find the most important technology for social TV or the next generation of TV? It's really clearly for me ACR, automatic content recognition. For me, it's like building a car, ACR is the engine. You can have the nicest leather seats and the opening top and whatever. If you don't have a good engine in it, it's not going to go anywhere. And for me, ACR is the engine of social TV and next generation TV. So for me, that little green piece of puzzle over there is the most important part. Without ACR, you do nothing, basically.
Evan?
I guess I would echo that. I would say there's a lot of less than optimal executions of ACR, and I think that's one of the reasons we've been attracted to Flingo. I think there certainly are some ACR solutions that work a lot better than others, and I think you need to be careful about the executions there. There's still, I feel like, a lot of ACR uses, people do it just because they can, but not necessarily great implementations. And sometimes I ask myself, what is the purpose? But I do think being in smart TVs, right, with the OEMs, is a completely different experience, and that's why we're playing in that space.
Jeff, things you've acquired so far, indicative of more things to come, or have you guys made your bets, or you have different bets coming up?
We've made our bets. The company's in a position where, from a market share perspective, for delivering over-the-top video, we're really comfortable with that. And to your point about integration, there's continued integration that needs to happen. There's organic growth that we need to prove as a public company to the markets. With regards to some of the items up here on the screen, I think I look at the opportunity, or even maybe the holy grail, as kind of the ACR, yes, but what that means to the advertisers that are trying to target consumers, and not just it's consumers and what they're doing around the content that they're watching, I think is how it all comes together. And ultimately, I think that's is what is going to drive the real financial value in this space, is that transformation of kind of the old advertising dollars and how they get transformed into new dollars. And it's probably not only just kind of taking it, it's not just one pot of dollars that's being moved from one bucket to another. I think there's a huge opportunity to grow that incredibly with these types of technologies.
And I'm sure all the network operators and programmers would agree and disagree simultaneously, because they probably want their share of the pie too. Aside from your own companies, gents, your answers.
I think the way we look at it is, and I think everybody would probably agree with this, there's great content being made in lots of different places now. And you could argue what great content means, but I think the reality is this content's being made in lots of different places and lots of different avenues. And good content costs a lot of money to make. And so as a result of that, if there isn't a way to figure out how to monetize it, and there isn't a way to figure out how to measure it, we're all dead. And so for me, the most important critical element is monetization and measurement. Those have to go, and they have to go hand in hand. Now, whether that's a subscription base or an ad model, or some hybrids thereof, the reality is the content's got to be paid for in some way, and it's got to be able to be measured and tracked and reported and leveraged. For us, that's what needs to happen. Now, whether or not that happens in short term, don't know. But I think that's one of the most fundamental critical things. We can talk about social TV and OTT and traditional TV and all these kinds of things, but they don't mean anything if you don't monetize it some way.
Yeah, I would come from a similar place, but say it a little bit differently, which is the big problem for the advertisers and the programmers in this space today is the increasing fragmentation and staying engaged with their viewers. So anything that any innovation that increases that level of engagement is going to be very important to the future of the ecosystem. So that's the business that we're in. And if you take ACR as the example, all three of you talked about ACR being the most important technology. In our mind, ACR is only one of many technologies. It's definitely an important technology, but it's really only one of many. There are alternatives. Some people think they're even better alternatives. And from our vantage point is, we do believe in ACR, but we also don't want to make a particular ACR vendor bet, right? Because different programmers and different service providers are going to be enthralled by different ACR companies. So our bet is to be agnostic, to be Switzerland, and to make them all available. They're all integrated. So I think part of the way we're approaching this marketplace is it's very difficult to to make a decisive bet today and think you really know what the future is going to be. So it's important to be open and agnostic and flexible.
Ashwin gets the final word on this topic, and then questions.
So I believe the question was is what's real on this?
Real, yeah, that's actually a better one. Nobody's really answered that. What
Okay,
do you think's not real?
Clearly, I think every TV marketer would agree that one of the primary motivators for people to watch is the social aspects. It's basically the ability for you to feel relevant when you're at work the next day and everyone's huddled around the water cooler and talk about what was on last night. And I think when you're not part of that conversation, you don't feel good about yourself for some reason. And I think the companies up there, which to me feel like they're in a very, very strong position, are both Facebook and Twitter. So a woman over at Twitter named Chloe is doing some really amazing things with basically the Twitter platform, knowing that social TV, the ability for people to socialize while watching TV is sort of like this sort of core necessity.
Like those hashtag pages that they just rolled out.
Yeah, you bet.
Yeah.
What they did with NASCAR, and so this is interesting. Now we can shift that conversation, both the time shift from the work at the next day to when you're watching, and the place shift of work to home. And Twitter is in a really great spot. Facebook is on that chart. Mark Hainan and the Facebook platform team that are basically opening up the platform to media services creates a phenomenal opportunity. So now the Watch API on Facebook is the one that Spotify has used, that Washington Post has used to really transform their businesses. They went from being linear growth businesses to ones that really grew in an exponential way because they were able to include that sort of harness the power of social in their businesses.
Questions from the audience, please. Go ahead. You were first. Step up, please. Who are you? And just shout it out.
My name is Greg Fishback. Nobody identifies the UI UX as being the gate that creates the problem with the flat screen on the wall. I mean, if I play with my iPad, it's real easy to access information. I can do whatever I want to do. I can do it with my PC or my Mac. But if you hand me, I buy an expensive television set for $3,000 or $4,000. I bought the Samsung 8000. I was in Samsung's innovation lab. The 8000 has voice recognition. It has a camera, it has motion control, and then I come out of the games business. I understand most of this stuff. I spent 4 hours trying to figure it out on the plane coming out. I couldn't figure it out. I handed the book to the guy that was sitting across from me and said, please send something. But the problem is the interface gets connected with I have a Time Warner home. It gets connected to the Time Warner box, which has 14 or 15 buttons on. So what are you doing? Where's the innovation coming?
This is the I call it the fungo bat problem, where it's everybody puts their hand on top, and everybody wants to be sort of that guidance and navigation gatekeeper. I've seen this years ago. That sort of user interface guidance and navigation thing, supremely important to surface video on demand content and over the top content. Zillions of choices, right? And it's not a grid, right?
Right, and I'm not sure exactly the question that you want to ask.
User interface is really
yeah.
And the connectivity or not of each of them.
So I agree. User interface is an extremely important thing, and to kind of put it in context of innovation, one of the things that Kit Digital has done, and this has actually come out of not an acquisition, but kind of the product of putting together some very talented people. And you can. I think we've probably got our videos on our website and everything. But we've partnered with Microsoft and with the Lakeview project, where we have the guide and discovery of content is actually powered through the Xbox, the gesturing and voice commands. So you can literally go through the entire guide and select content. Using those two methods, instead of a remote control. Now, I think there's still a lot of room for improvement, in getting the voice commands correct and making it a really smooth UX. But this is an example in context of some of the other things we talked about how you put some very innovative entrepreneurs together in context of this massive number of companies rolled up, and you drive some really interesting innovations, in an industry that everybody has a lot of passion about.
Yeah, I think the question is hugely important because everybody wants to control it. Programmers certainly, network operator especially, and you've got a lot of technology that, or the actual set, the actual device.
Yeah. In our case, we're taking that innovation and going back to the network operators to sell it as a software solution, with some services wrapped around it.
So we're in a period of transition now. So I think this is going to be an issue for a while. We're going from a world where manufacturers that just made hardware are now trying to be distributors and enablers of content and services. And so that's a whole new set of DNA that these companies have to develop. And I think most launches, and I'll categorize companies in two camps here. Companies that have treated broadcast as an app. Companies like the one you mentioned, Google TV is an example. If you look at that interface, broadcast TV is one of a million things you can do with this new computer you've got in your living room. Total train wreck, right? And then there's companies that think of broadcast as a platform. Companies that have said, look, with all these new features, the people that have these connected TVs and smart TVs, they're still watching regular TV. And so broadcast is the thing that they're doing. Let's improve and enhance that experience with the new capabilities of this hardware. And companies like Sling and TiVo and many others that are in that camp have done quite well.
In the back, shout it out.
I have a content question for you. All of the companies up there and all of you individuals look at a lot of programming and a lot of content. And I'm coming from this question as a news producer and a documentary producer. And so my question is to people like myself who work in the field creating information every day, what are some of the applications and what are some of the trends that you're seeing that would help us better communicate all the hard information that's out there in the world of all the critical information that we're seeing around us every day?
Television and video, correct?
Well, yeah, television and video, yeah, but how we can integrate that information into this new social network, and what are some of the trends that you're seeing?
News and content, how does that evolve?
How is your content distributed today?
Well, it's right now it's either broadcast or integrated into an existing website, just as a linear video. But I'm very intrigued with the notion of how you take content where you get a sound bite, but expanding that sound bite so that people can interact and learn a lot more from that short 3 or 4 minutes.
It would seem ACR and second screen would be
Well,
quite
so
something.
now the kind of content you're talking about, if I understand you correctly, is documentary. Is that what you're working
Documentary
on? Okay, cool.
news, yeah.
All right. So the first thing I would do is get on the hashtag, the Twitter hashtags for some of the Discovery channels or some of the shows that Discovery Channel or National Geographic has, and see what people are tweeting about. Where are the peaks? I don't know if you've seen the charts that Twitter pulls out for some of the shows. It really looks like an EKG. It looks like when the chat starts for a show, pick one show on National Geographic, show X, whatever. They'll show that the show that starts at 9 p.m. actually starts, people start talking about the show at 8:45, and then it goes up. And then it goes up and down during the show when a lion gets eaten by something. Oh, actually, when the lion eats something else, rather. And then something else happens, and then something else. And then it goes down at the end of the show, and then it continues a little bit. If you find those shows that people talk about before and after, you can sell your content. This is completely new content. You sell your content to whoever is producing the show, because they are looking for pre-show and post-show content, just like you have today's Super Bowl pre-show and post-show shows.
Exactly.
So here is a brand new outlet for your content.
So
Identify the hashtags and go sell your content to these
Peter, you have the last word. Unfortunately, we could go on forever. But
Okay,
go ahead,
I'm
please.
sorry about
That's
that.
good.
But, I thought I heard a slightly different question, which is within the confines of what you're creating, how can you use these new capabilities? Yeah. So look, there's a technology answer. So it can be two-screen, it can be connected TV, it can be traditional TV. And each of those has a different technology element to it. There's a business question, of course, which is all the business questions involved in the ecosystem. But at the core, it is wonderful to hear content creators start to ask this question, because our belief is it's when the content creators really decide that they're going to make their content with this kind of technological capability in mind that this business will really soar. So here's an example of what I mean. So we're in the interactive television business, right? And you do a 60-minute documentary and you've left 25 hours on the floor somewhere, right? And so you have all these compelling ideas about what's magnificent about all that content content that you can't get in the show, right? And if you can engage with your customer, it allows your customer to actually go deeper into this content, to actually, you use your hour to move, into more video content, or to ask questions specifically about certain characters that appear and want to go deeper. You can make all of that stuff happen. And it's when you guys do it that it will happen in a really wonderful way.
I'll wrap that up with a word that you might want to go back to the office with: dimensionalization. Right? You're producing today for the linear, which is the sort of big nugget, but think of the other dimensions of delivery, to Peter's point, as library, as synchronous content, et cetera, and it's standardized against those things, and you have, I think, a whole content ecosystem where you just had one. That said, I'm sorry that we have to sort of end on that sort of abrupt note, but thank you very much. It's a very, very good panel. I appreciate it very much.